Hey y'all, it's your boy John, and welcome to the Private Turtle Aquarium. Why are we here? Because, like in our favorite childhood stories, the turtle, the dividend investor, always beats the hare, the one looking for penny stocks and shitcoins. So today I'm going to show you how to be a better turtle investor, a dividend investor, and double your dividend with selling options. And as always, none of this is financial advice. It's literally the channel name.
Knowledge.
Now, I'm not going to go in how to select dividend stocks. I really don't trade that many stocks. I mainly trade ETFs right now. But, for a good dividend stock, should be a solid company, should have a dividend growth, should be paying out dividends consistently. And then you can decide what you want to invest in. But if you do dividend invest, I'm going to show you how to double your dividends. And I'm going to show you an ETF I would actually use this on as well. So we're going to make this really simple. So I have stockanalysis.com up. It's free, and you can search your favorite symbol. Now, as I said, I don't really dividend invest, but I would buy SCHD, which is a dividend ETF fund by Schwab. So you can see you have the overview holdings. What we really want to do is go to dividends, and we want to see the annual dividend. To make your calculations easier, we're just going to go on the annual dividend payout, and you see that's $2.60. So every year, by holding SCHD, you get $2.60 or about 3.55% every year. Now we can see our annual yield is $2.60 per share of SCHD, but we're going to utilize options to double our dividend income per year. So for options contracts, you need 100 shares. So really we need to do $2.60 times 100, which is $260. And then we need to divide it by 12 because we're going to do monthlies to make this really simple to see how much we need to make per month to double our dividend income. So we collect $2.60 per share. And since we are trading options, we need 100 shares. And then now we know we need to make $21.66 per month at least to double our dividend income because we're collecting the dividend and now we're also collecting options premium. So we're effectively doubling our dividend yield. Now, what's the risk behind this? You might sell at a wrong time during the month and maybe it'll get called away. So let's say you were right here, you decided to sell your monthly. It might have just shot up and maybe your monthly would have got called away because we went from 66 to like 72, right? So it is really low risk. There's really not much risk since you're going to be holding the stocks for a long time if you're a dividend collector. So you might as well just make a little bit extra selling the options with the small risk of getting called away, which would be a taxable event. But with that, you can just roll the option, buy out of the option for a small loss, or just sell the shares and buy them back. So on Robinhood, let's go to SCHD. Let's go to SCHD options, and let's do monthlies. Make it simple. That's why we divided by 12. And we're going to sell a call. So our goal to double our dividend income is to make at least $21.66 per month. So we can see we're 32 days out. We have two options. We can shoot for the 75 and we'd collect $38 at this current price. And you can see there's a lot of options volume, so you probably get filled. Or we can wait for the price to shoot up a little more and we can try to get $21 at the next strike price if it goes up a little more. Now, SDHD might not rise, so you might not be able to use the 76 strike price. It might not become an option. So let's assume this is our only option because as of now, it is. To double our dividend income with SCHD, we have a 78% chance of profit right now for the month. So you have a high chance of profit and you would over double your dividend income since we are blowing past our $21.66 per share goal. So let's go over a popular dividend stock you might own. A lot of people own J&J, Johnson & Johnson, right? So let's go to dividends, and we can see the annual dividend is $4.76 per share, 2.99% with the current price. Let's go to our calculator, and we know it's actually $476 because we're going to do options contracts, so we need 100 shares, and let's divide this by 12. So each month, we need to collect about $40 to double our dividend income because you are collecting the dividend and you're collecting that options premium. So let's go to Robinhood, J&J, trade J&J options. We're going to sell a call. We're going to do a month out because we divided by 12 and make it simple. To double our dividend, we need about $40. So let's see where we can collect $40. with Johnson & Johnson right now, we have about two options if we want to be conservative. We have the 165 where we collect 93 bucks, which would be way above our $40 we about want, or we would have 170, which is a 93% chance of profit, but you'll only collect 24 bucks, which would be below. So if I was to trade this, you have two options. You can see if the price is going to rise and maybe you'll be able to sell that 170, or you can be more aggressive and sell the 165 with the 81% chance of profit, but you might get called away, but you won't have to be as aggressive in the next month. So the goal is to double your dividend income, and we needed $476 on the year for 100 shares to double our dividend income. So if you collect 93 bucks, you were really aggressive this month, maybe you feel it's overextended if you're looking at RSI or MACD, maybe this is a good time to be more aggressive, and maybe in the next month you can be less aggressive and collect a smaller premium amount. So there are multiple ways to play this, but it'll be pretty easy to double your dividend income if you select the correct strike prices with a little bit of timing, but the chance of you getting called away anyways is super low. Even if you do get called away, you can always buy your shares back or roll the option. So let's say you have a lot of SPY in your portfolio, which I do, you guys probably do too. Currently, the annual dividend is $6.52. This isn't really a dividend ETF per se, but you are getting a dividend yield. So if you're holding it, let's say you want to double this. So our annual dividend is $6.52 per share. So since we're doing contracts, times it by 100, so that's 652 bucks. So let's figure out what we need monthly, which is only 54 bucks per month, and then we'll have almost a 3% dividend yield. So let's go to SPY. Let's sell a call. Let's go a month out as usual. And then our goal is 54 bucks. So let's do this 55. So for the month, we could collect 55 bucks for selling a call at 472 with a 92% chance of profiting. And SPY would have to rise 22 bucks if I sold this today. So SPY would be really good to do this strategy on, collect a little extra dividends, double your dividend, because there's a lot more strike prices compared to like our J&J example. And with this, SPY actually turns into a really good fund if you double your dividend with selling call options. So if you are a dividend investor, I think this is a really good strategy. Depending where the stock market lines up, you might have to sell a little closer or a little farther and you can be more conservative. But the chance of you getting assigned on this is really quite low. You might have a 90% chance of being profitable and doubling your dividends for the year, especially if you're the turtle and focusing on those slow compound gains. I'm hoping to do this in my retirement portfolio soon, as I just bought a bunch of SPY, which you can watch here. But as of now, I'm really just accumulating a lot of Bitcoin and a lot of stocks, and hoping Bitcoin will rise in the next 2 years or so. So that's it. See why I bought only SPY in my retirement portfolio. Peace.